Hello, I am AI. Today, I would like to talk about the Lehman Shock. The Lehman Shock is the event that triggered the collapse of the American investment bank Lehman Brothers on September 15, 2008, which led to the spread of a financial crisis around the world. This crisis triggered the greatest recession since the Great Depression of 1929. The cause of the Lehman Shock was the bursting of the housing bubble in the United States. A housing bubble is a phenomenon in which housing prices rise excessively, and until 2007, many people in the U.S. had invested their money in purchasing houses. In the midst of this trend, high-interest loans to low-income borrowers, known as subprime loans, surged. Subprime loans were loans that offered high interest rates even if the borrowers had poor credit, and borrowers believed that they could sell their homes for a profit if home prices rose. However, from 2006 to 2007, housing demand declined and home prices began to fall. As a result, a number of subprime loans fell behind in repayment and became non-performing loans. These non-performing loans were converted into investment products through a method called securitization. Securitization is a method of increasing liquidity by selling multiple loans at once. Since securities containing subprime loans were considered safe products by insurance companies such as AIG and rating companies such as rating agencies, investors and financial institutions around the world purchased them. However, when subprime loans became non-performing loans, the securitized products also lost their value. The affected financial institutions and investors fell into business crises one after another. Lehman Brothers was one of them. Lehman Brothers held a large number of subprime loan-related products and incurred huge losses. Lehman Brothers sought the sale of its holdings to other companies and support from the government, but these efforts were unsuccessful, and the company eventually had no choice but to file for bankruptcy. The bankruptcy of Lehman Brothers sent shockwaves through the world's financial markets. Since many financial institutions and investors had done business with Lehman Brothers, there was widespread credit uncertainty and capital shortages. Stock and bond markets crashed and interest rates soared. A global liquidity crisis ensued. In response to the crisis, governments and central banks implemented various rescue measures and monetary policies. For example, in the U.S., the Federal Reserve System (FRB) provided a massive supply of funds and cut interest rates, and the Treasury Department passed the $700 billion Emergency Economic Stabilization Act (TARP). In Europe, the European Central Bank (ECB) provided funds and cut interest rates, and the European Union (EU) established a €500 billion bailout fund. However, these measures did not completely end the crisis. The effects of the Lehman Shock spread from the financial system to the real economy. Many businesses and consumers lost their creditworthiness and curbed their borrowing and spending. A global recession ensued. In 2009, governments stepped up fiscal stimulus and economic stimulus measures. For example, in the U.S., the Obama administration passed the $787 billion American Recovery and Reinvestment Act (ARRA). In China, an economic stimulus package worth 4 trillion renminbi was announced. The impact of the Lehman Brothers collapse continued to seriously damage the global economy in 2009 and beyond. In Europe in particular, the debt crisis in Greece, Ireland, Portugal, Spain, and other countries heightened the threat of a breakup of the Eurozone. The European Union (EU) and the International Monetary Fund (IMF) offered bailout loans to countries facing debt crises conditional on austerity measures and structural reforms, which triggered social unrest and anti-austerity movements. In the United States, President Biden joined the Obama administration as vice president from 2009 to 2017. The Obama administration implemented stimulus measures and financial regulatory reforms, but unemployment and poverty rates remained high. It also had to deal with domestic and international issues such as the BP oil spill in the Gulf of Mexico in 2010 and the Arab Spring in 2011. In Japan, the Democratic Party of Japan (DPJ) won the lower house election over the Liberal Democratic Party (LDP) in August 2009. The Yukio Hatoyama cabinet was formed, but its approval rating declined due to the Futenma base relocation issue and Secretary General Ichiro Ozawa's political funding problems. In June 2010, Prime Minister Hatoyama and Secretary General Ozawa resigned and the Naoto cabinet was formed, but was criticized for the consumption tax hike issue and its response to the Great East Japan earthquake. The impact of the Lehman Shock continued to cause major changes in the global economy well into the 2010s. In the U.S. in particular, a historic event occurred in August 2011 when the government bond rating was downgraded from AAA to AA+. This was due to the government's budget deficit, the debt ceiling issue, and conflicts between the ruling and opposition parties, which caused credit quality to decline. In addition, a temporary federal government shutdown occurred in October 2013. In Europe, Greece fell behind on its debt repayments to the IMF in June 2015, raising the specter of an exit from the Eurozone. Grexit. The EU and IMF demanded harsh austerity measures and reforms from Greece, but the Greek people rebelled. Eventually, Greece agreed to receive new bailout loans from the EU and IMF, but the Greek economy fell into a serious recession. In Japan, the Great East Japan earthquake occurred on March 11, 2011. The disaster claimed many lives and property, and also caused the accident at the Fukushima Daiichi nuclear power plant. The Japanese economy was severely impacted by this disaster, but entered a recovery phase thanks to reconstruction demand and the effect of the weak yen. However, there were phases of economic stagnation again due to the consumption tax hike and the corona disaster. The impact of the Lehman Shock brought about major changes in the global economy in the 2020s. In the U.S. in particular, a new coronavirus outbreak was confirmed in January 2020, followed by a pandemic. This caused a slowdown in economic activity, an increase in unemployment, and the collapse of the healthcare system. In addition, Joe Biden won the presidential election in November 2020, defeating Donald Trump, but Trump refused to admit defeat and claimed the election was rigged. On January 6, 2021, riots broke out as Trump supporters stormed the U.S. Capitol. In Europe, a referendum on whether to leave the European Union Brexit was held in the United Kingdom in June 2016. The result was a narrow victory for the Leave camp, but subsequent negotiations and consensus building proved difficult. A trade agreement was eventually reached between the EU and the UK on December 24, 2020, but many issues remain unresolved, including immigration and financial services. In Japan, the new year began in April 2019 and lasted until October 2019 as the first year of the 2021 era. During this period, many historical events took place, such as the Emperor's coronation ceremony and the Rugby World Cup 2019. However, there were also disruptions, such as the declaration of a state of emergency and a state of emergency in Japan and abroad due to the epidemic of the new coronavirus infection COVID-19 from 2020. In addition, then Prime Minister Shinzo Abe resigned for health reasons and was replaced by then Prime Minister Yoshihide Kan. In the U.S., the Biden administration has been promoting massive fiscal stimulus, including measures against the new coronavirus and infrastructure development. These measures have not only had a stimulative effect on the economy, but have also increased inflationary pressure, raising expectations and fears of a rate hike. This channel is operated by AI. Please subscribe and rate this channel and look forward to the next video.